Hello, my dear students. Here I am going to upload Financial Education and Investment Awareness Part 2. Part 1 under Trading and P&L account related MCQs I covered. This part under I am going to cover Balance Sheet expected MCQs. The theory part of balance sheet I already given in my offline class. Here just I am uploading expected MCQs regarding balance sheet itself. Refer it. The first question, balance sheet of a company is required to be prepared in the format given in. So right answer, Schedule 3 Part 1. As per Company Act 2013, Schedule 3 Part 1, it's a balance sheet. Schedule 3 Part 2, it's a statement of P&L account. Next question, as per Companies Act, the balance sheet of company is required to be presented in. It must be in vertical form. So traditionally, before 2013, balance sheet of company were horizontal formally prepare ಆಗ್ತಾ ಇತ್ತು. Horizontal form, or it is also be called as a T format, liability, amount, assets and amount. But after 2013, Company Act, it guidelines given the balance sheet of company is required to be presented in vertical form only. So this is a format of vertical form of balance sheet. So here the first head is a equity and liability or liability, equity and liability portion. Here share capital, retained earnings, other equity funds or it comes. Non-current liability under long-term borrowing, long-term provisions, deferred tax liabilities, other non-current liabilities. Current liability, short-term borrowing, trade payable, other current liabilities, then short-term provisions. Assets under the first and asset. Here we know assets are classified into two types, non-current assets and current assets. Non-current assets we can also be called like a fixed assets. Non-current assets under some assets are tangible, some assets are intangible. So tangible, intangible, both are, it comes under the head of non-current assets only. Current assets under inventory, investment, trade receivable. Under trade receivable, sundry debtors and bills receivable it comes. Cash and cash equivalents, other current assets. So after 2013, so company balance sheet it must be prepared in a vertical form only. The next question, which of the following is not required to be prepared under the Companies Act? Statement of profit and loss, it is compulsory. There is no option. Balance sheet, it is also be mandatory. There is no option. Report of directors and auditor, this one is also be compulsory. But fund flow statement, it is option. It is left it out to the management. It is not required to be, it is not compulsory to require to prepare under the Companies Act. It is optional one, it is a management reference only. Fourth one, according to prescribed order of assets in a company's balance sheet, that should be shown first of all. So asset side, it comes non-current assets only. After that, main heading is a current asset, it comes. Current assets under current investment, it comes. So first head, it comes non-current assets. We already know about format of balance sheet in both manner, horizontal and vertical. So next question, in a company balance sheet, dash appear under the head non-current assets. Goodwill is a intangible asset. It is also be one of the part or one of the head, one of the part which under it comes under the head of non-current assets only. Current a patent is also be intangible. It is also be, it comes under the head of non-current assets. Vehicle, it is also be fixed assets. Tangible asset it is. So all of the above is the right answer. Call scenarios appeared in the company's balance sheet under the head of. So here right answer is B1, shareholders funds. Shareholders funds. Call scenarios means any shareholders are pending to pay money, or if we fail to that. If it is paid advance, that one called as a calls in advance itself. So these calls in arrears, it should be deductible out of total shareholders funds. Then next question. Short-term borrowing appear in a company's balance sheet under the head of current assets. Next one, fixed deposits appear in the company's balance sheet under the head of long-term borrowings. Here options are given. Fixed assets, it always to a long term it is. Long-term borrowings of the company. It has some fixed time limit also be. So it is always appeared long-term borrowing under the head of long-term borrowing while we preparing company balance sheet. Goodwill appeared in a company's balance sheet under the subhead of intangible assets. Goodwill is nothing but brand image or good reputations of the company. It cannot see, it cannot touch, we can feel only. It has some market value. So goodwill is always, it appeared under the head of intangible assets. The main head is non-current assets itself. Goodwill is a non-current assets. Out of that, again there are two type of assets, tangible, intangible. Especially it is a intangible it is. Securities premium reserve appeared in the company's balance sheet. Obviously, here the word is carried, reserve. So the securities premium reserve is also appeared in reserves and surplus head only. Prepaid expenses appeared, it's a current assets. Prepaid expenses, it's a current assets. Which expenses are paid in advance? That expense is called as a prepaid expense. So it should be appeared in other current assets head. Dash appear in the company balance sheet under the subhead short-term provisions. Provision for tax. Provision for tax appeared in the company's balance sheet under the subhead of short-term provisions. Because interest accrued but not due on borrowings, it is not a provision. Unpaid dividend, it is a current liability, not a provision. Calls in advance is also be to that. It is a part of shareholders fund. So only provision for tax is it comes under the head of short-term provision. Bills receivable appeared in company balance sheet under the subhead of trade receivable. So trade receivable ಅಲ್ಲಿ ಎರಡು ಬರುತ್ತೆ, bill receivable and sundry debtors. ಮೇನ್ ಹೆಡ್ ಅಲ್ಲಿ ಕರೆಂಟ್ ಅಸೆಟ್ ಹೆಡ್ ಅಲ್ಲಿ ಟ್ರೇಡ್ ರಿಸೀವೇಬಲ್ ಅನ್ನೋ ಸಬ್ ಹೆಡಿಂಗ್ ಅಲ್ಲಿ ಬರುತ್ತೆ. The next one. So while we preparing balance sheet, one more liability arises. That one is a contingent liability, which one is not affected to the balance sheet. On that reasons, it appeared outside of the balance sheet. Here example of contingent liability is claims against the company not acknowledged as debts. The question is like that. Claims against the company not acknowledged as debts is shown under the head of contingent liabilities. Unclaimed dividend appeared in the company's balance sheet under the subhead of other current liabilities. Yeah, obviously it is a current liability, not a short-term borrowing, not a trade payable. Trade payable under only two items it comes, bills payable and creditors. And even though it is not a short-term provision, it is. 6% debenture appear in a company balance sheet under the subhead of long-term borrowings. Here the answer is long-term borrowing. Yeah, debenture is a liability, especially it is a long-term borrowing it is. It comes under the head of non-current liability. Here like a asset, liabilities also be classified into two types. Non-current liability and current liability. Debenture is one of the part of non-current liability, especially this is a long-term borrowing it is. Which one of the following item is shown under the head current liability in the balance sheet of company? Investment is asset, not a liability. Reserve fund is a part of fund, not a liability. Part of shareholders fund. Unclaimed dividend is a current liability. Livestock is not a current liability. It is 50,000 9% debenture redeemable within 12 months of the date of balance sheet will be shown under current liability. If any debentures are redeemable within this year or within 12 months, then that liability is a short-term liability. Especially it shows under the head of other current liability. Which one of the following item is shown under the head of current assets while preparing balance sheet of company? Trade investment is a non-current asset. If any in mentioned short-term investment, then only it comes under the current assets. If they are mentioned only trade investment, then it is a non-current assets. Vehicle is also be non-current assets. Livestock is also be non-current assets. Only inventory is a current assets. Under which head the item bill discounting but not matured will be shown in the balance sheet of company? The answer is contingent liability. Bill discounted but not yet matured. So this liability is not affected to the current year of the balance sheet. So this is all about to the balance sheet expected MCQs questions. Thank you for watching.